Quickly to the market, the Dow gaining some steam. Now we're up 150 odd points. The Nasdaq holding on to a solid gain. Do we have Ryan Payne available for a couple of minutes? I think we do. Ryan, I want to bring you in. The Fed has lowered interest rates, quarter point now, another quarter point later this year, maybe quarter point next year. Is the Fed doing the right thing, and will it set off a solid rally?
100%. I mean, I think they've definitely spiked the punch bowl, but if nothing else here, Stuart. So I think obviously that is very good for markets. If you look at fiscal, we're spending on the economy now. We have lower interest rates. And on top of that, look, the employment numbers came in strong today, and we're seeing acceleration of growth in GDP. So I think overall here, I think your bigger risk here is we may overheat the economy, having such loose policy, given the fact that the economy has already been heating up. So that would be my big concern here. But look, the punch bowl spiked here. Can't fight the Fed. You've got to be long here. And I would mention the UK market is actually up 25% this year. So I think Wall Street was very happy they did that deal first, and they got the best trade deal of anybody.
But you're right to point out that it is unusual to see the Federal Reserve cutting interest rates when stocks are at an all-time high. As you say, there is some danger there, isn't there?
There really is, because I mean, if you look at valuations, they're not cheap. And I mentioned this on your show a lot, but there's just a lot of cash sitting on the sidelines. Now it's going to get a much lower interest rate than it was before. And that's going to force a lot of money into the stock market. And we know when we get a melt up, and we've seen this before, we saw this in the late 90s, right before the tech bubble burst. What do you get after that? You get a meltdown. So I do think right now you have the risk of maybe price instability here. And remember, the Fed, one of their main tenets is keeping price stability. So I would actually argue here, maybe take the counter here. Maybe they shouldn't have cut. Maybe they're a little quick to do that, just given the fact that if you look at economic conditions in general, they're a lot hotter than basically what you would expect when you get a rate cut, like we're seeing right now.
But they didn't do what the president wanted them to do, which is a dramatic rate cut. They didn't do that.